I've honored my promise to my dad, and I buy something every 2 weeks. I have for 33 years. I have never, not once, missed a 2 week period ever where I didn't accumulate some gold or silver when we got paid. And to me, I have always looked at it as wealth. It's not an investment to me. And it's wealth that has outlived 2 world wars, German hyperinflation, the Great Depression, every pandemic, anything the world has ever thrown at it, frankly, which leads us to today where over the last 18 months, the central banks, the most well-funded and well-informed traders on the planet, have bought more than they ever have in history.
For the past 33 years, Andy Schectman has diligently adhered to a personal commitment made to their father, buying gold or silver every 2 weeks without fail. This routine has been unwavering, regardless of economic conditions or external events. They perceive gold and silver not merely as investments, but as tangible forms of wealth that have stood the test of time, surviving significant historical upheavals such as 2 world wars, German hyperinflation, the Great Depression, and various pandemics. This steadfast belief in the enduring value of precious metals brings Andy Schectman to the present moment, where they highlight a remarkable trend. Over the last 18 months, central banks, recognized as the most well-funded and astute traders globally, have been engaging in unprecedented levels of gold and silver purchases. This surge in central bank acquisitions underscores the enduring significance of these metals and suggests a notable shift in perception among influential financial institutions. But before we proceed, please remember to show your appreciation for this video. Now let's continue with the video speaking.
And so they find it to be significant, but what opened up my eyes is an event that happened in 2019. And it really started opening my eyes in 2017. In all of the public speaking I was doing, I would talk about what started to happen in 2017. In 2017, we had witnessed 6 years of a downdrafting market where the price of gold and silver from its high of $1,915 in gold and just about $50 in silver in 2011. From that point forward, for the next 6 years, it drafted downwards. And by 2017, I wanted to hide under my desk or just not come into the office because for the first time in my career, everyone was selling. What was typically 1 out of 100 transactions was now 65% of everyone's business in this industry were people selling, aggravated that gold didn't live up to its reputation as a cut from the same cloth as Bitcoin soared to the heavens, and the stock market, having no gravitational pull, continued to move higher and people capitulated. Yet in 2017, something very interesting happened as all of this anti-gold rhetoric was fluttering around the ether. The German Bundesbank, who had tried for 3 years to get its gold back, made a very public disclosure demanding that the Fed send it back its gold. Now, this caught my attention. Why is the Bundesbank repatriating their gold when all central banks have been selling gold the last several years? And what really caught my eye is that within a few months of that happening, the Bank of Austria, Poland, Hungary, the Czech National Bank, the Dutch National Bank, all of these Eastern European banks did the same thing. They requested their gold back from the New York Fed and the Bank of England, and they made it fairly public. The following year in 2018, those same banks bought more gold as a group than they did in the 60 years previously combined. Now, I'm talking about this all over the place. It was 2019 when I started doing YouTubes, and it was because here, after this massive acquisition and repatriation by the most well-informed traders on the planet, they doubled that amount in 2019, and out of nowhere, I'm sure there was no coincidence in this, the Bank of International Settlements, which is the central bank, the most influential bank on the planet, reclassified gold as the world's only other tier 1 reserve asset, in essence. And so since the end of World War II, there's been one tier 1, US dollars and treasuries. Gold was always a tier 3 asset, where only 50% was calculated on the balance sheet, which would denigrate your balance sheet, would inhibit the ability to do things with a full balance sheet. Here, only 50% was calculated on the balance sheet. And so central bankers, they didn't want to own it. It was denigrating their balance sheet. It cost money to store. It earned no interest. So they would sell it in favor of treasuries or in favor of equities or whatever was doing better. And all of a sudden, now it's a tier 1. And the banks had been buying it for the last 2.5 years before this and repatriating it. Now something's going on. And so there's only one other tier one asset, according to the most influential traders on the planet, other than US dollars and treasuries, and that is gold. And when you look at gold that has been acquired by the banks pretty much nonstop since 2017, there's no coincidence to it that last year, or the last 15 months, they bought more than at any time in history.
In 2019, an event occurred that prompted a shift in perspective for me, building upon observations starting from 2017. During this period, despite a 6-year downward trend in gold and silver prices, there was a significant change in market dynamics. This shift was particularly evident as anti-gold sentiment circulated, coinciding with the German Bundesbank's public demand for repatriation of gold reserves from the Federal Reserve. This action sparked a domino effect, with various Eastern European banks following suit, reclaiming their gold reserves, and subsequently increasing their gold acquisitions as a collective group. This trend continued with the Bank for International Settlements reclassifying gold as a Tier 1 reserve asset alongside US dollars and treasuries, which led to a surge in gold acquisitions by central banks, doubling in 2019 compared to previous years. This accumulation trend by influential traders suggests a fundamental shift in the perception and importance of gold as a reserve asset.
This, to me, is the underlining why, is that gold is wealth, gold is money, and gold is viewed that way by the most influential players on the planet. They use the Western suppression of COMEX in order to run cover for their acquisition. If I want to buy a COMEX contract, which is 100 ounces, to hedge my position in my warehouse, I only need $7,000 or thereabouts in my margin account, and I control nearly 200,000 worth of gold. If I am a commercial bank or a central bank with 500 million in my margin account, I control 15 billion worth of gold on COMEX. I can create any perception of reality I want. And that is exactly what has happened for a very long time. There's a term in economics called Gibson's paradox, which speaks to the inverse relationship between real interest rates, which have been horrible, and the price of gold. And if you are going to maintain super low manipulated interest rates to create a perception or an illusion of prosperity that we did for so long, then you have to step on the canary in the mine shaft, and that was the price of gold. And yet all of a sudden, the most influential, well-funded banks on the planet are not only buying it at levels we had never seen before, but they were repatriating it from the exchanges and the Western central banks. So to me, on a very, very, very basic level, that's why people need to own it, because the most influential, well-funded, well-informed traders on the globe say one thing and are doing the other and accumulating it as if it is really important. So on a very generic, basic level, the biggest money in the world says you should own it by their actions, less by their words, and they're using manipulated price to run cover for their de-dollarization and their acquisition. That's why you need to own it. Look, the paper market still is the tail wagging the dog, no question about it. But I could argue it's losing its ability to continue to do this at a rapid pace. The London Metals Exchange is a good example. They have pretty darn close to the lowest amount of silver in the exchange that they've had in the 140-year history of the exchange. We've seen a massive bleed down in gold and silver off the COMEX market, where in 2020, this group of they're called the others on the COMEX. They came out of nowhere in 2020. There used to only be 2 groups of reportables on what they call the Commitment of Traders report. Every week, the exchange publishes the positioning of the largest traders, and it was always just the commercial banks and the specs, which would be the hedge funds. That's it. And then out of nowhere in 2020, they published a new group of reportables they call the others. I believe they are sovereign wealth funds and very well-to-do family offices who are draining the exchanges along with the central banks, to the point where in 1 year in 2020, we saw more silver delivered than in a decade before combined. They took more gold off in 2020 than the Bank of Japan has in their official holdings. And these trends, both in what's called exchange for physical, where you can buy a COMEX contract and exchange it for physical in London, and or the bleeding down of the COMEX, is to the point where you're at the second lowest level of silver in the registered category in the history of the COMEX, and massive bleed downs in gold to in a market that was never designed to be a delivery mechanism, this is why it's getting harder to suppress the price, because when the price gets suppressed, you have sovereign nations and sovereign wealth funds that are standing there like, okay, we'll take delivery. And so the delivery, or the prospect of massive delivery off of the exchanges in an environment where the availability of metal is decreasing on these exchanges, means we're getting closer and closer and closer to that moment. Look, it's easy for these players to manipulate a market by pushing it in the direction that it is going. When nobody wanted gold and silver, it was easy to suppress the price of gold. Now it becomes a very dangerous game.
This highlights the intrinsic value of gold as wealth and money, recognized by influential global players. These entities exploit the Western suppression of markets like COMEX to manipulate perceptions while acquiring significant amounts of gold. The discrepancy between their actions and words underscores the importance of owning gold, as indicated by their accumulation despite market manipulation. Although the paper market still exerts influence, its efficacy in suppressing prices is waning, evident in dwindling reserves on exchanges like the London Metals Exchange. In 2020, a new group of traders, likely sovereign wealth funds and affluent family offices, emerged on COMEX, further draining reserves. This, coupled with increased delivery demands, suggests a shift towards physical ownership, challenging market manipulation. Manipulating prices was easier when demand was low, but with increasing interest in gold, it's becoming a risky endeavor. Thank you for your continued support. Share your thoughts on Andy's insights and the future of silver in the comments below.